Hello traders, welcome to a new video. First of all, thank you for the support that you guys have shown for the previous video. It was really overwhelming. And like you guys have asked, we are here with the next video, which is based on candlestick. So talking about candlestick, it is something that conveys us what happened in the market between buyers and sellers at a certain period. Okay, if you're taking a candle like 5 minutes, 15 minutes, hourly candle, weekly candle, daily candle, so it just conveys us what happened between buyers and sellers in the back end, right? So, and yeah, there are a few videos already on candlestick, but I genuinely feel the 100% is not there yet, right? Because when it comes to candlestick, right, if you're just trading based on hammer or just based on any candle, the probability of the trade winning is going to be low, right? So in this video, I'll try my best to not just convey the technical stuff, but also try to give you the psychological move as well. See, if you're taking a trade just based on random candlestick pattern on a random place, it is not going to make sense, right? But if we are combining it with other things like support and resistance and understanding the logic, like where the sellers have lost the power, where the buyers are getting accumulated, at what level they might have a breakout, so these things can make more sense when it comes to trading, right? So yeah, let's get started. This is me, Harshini. You're watching me on Tradit. Okay, for people who are new or for people who don't know, there are two candles, right? A bullish candle and a bearish candle. So for a bullish candle, let me show you an example here. So the candle opened at 101, right? And it made a low of 100 and then it started going up, making a high of 104 and closed at 103, right? So it opened at 101 and then it closed above 101. It somewhere closed around 103. Right, so this is a bullish candle. And if you take for a bearish candle here, the price opened at 99, then made a high of 100 and then it started coming down. Right here, if you can see, it made 98, it crossed 97, 96 and it gave a low of 96 and making a close of 97. See, the only difference between a bullish candle and a bearish candle is, for a bullish candle, the close, right, was above the open. Right, see, previously the open was at 101 and it closed anywhere. If it closes about 102, 103, it is going to be a bullish candle. But for a bearish candle, if it comes below, that is, it starts losing its value from 100, if it is coming down and closing below, it is going to be a red candle. Simple as that. So these were the two candles, but in order to get started with the single candlestick pattern and all the reversal setups, I want you guys to know, see, just by understanding the explanation or the textbook version, like hammer, engulfing pattern, it is not going to make any difference, right? Just by knowing the names, will it do any good? No, right? So in order to understand how to trade, the psychology also plays a. For example, if you take a hammer, a textbook version would say a longer, lower wick with a small body. But just with that, will you be able to trade? No, right? Only if you understand how the longer, lower wick is being formed or what has happened between buyers and sellers. Only then you will be able to potentially read the charts and take a good trades, right? So here, there are 5 bullish candles arranged based on the strength. So first is going to be the most bullish candle here. And if you see, the price opened at 100, right? And also you can see we don't have any wick here. It just started going up. It started at 100. There was no lows, nothing. It started going up, crossing 101, 102, 103 and gave a close at 104, the highest. So this is the most bullish candle. It didn't have a low, nor did it have a high. The open is equal to low again and the close is equal to high. It is a bullish candle, right? So it just conveys us that the candle opened, there was no time for making a low or giving a upper wick, but just it started increasing and it gave a strong close. It could, right? So this is the most bullish candle that we have. And in the second most bullish candle, we can see the price opened at 99, right? It made a high of 100 and then started coming down. It made a red candle. It went up till 97. It was a good red candle, but then slowly it was not able to close. The sellers who were present in the market were not able to give a close at 97. right? But eventually there were also buyers who pushed the price up and gave a close. So what does this mean? It means in the first half there were sellers who managed to somehow push the price, break the support level and go down further, but they were not strong enough to sustain at that particular point, right? And then there were buyers who pushed the price up and gave a close at 101, right? So this is a most bullish candle, and the third one here is a normal bullish, so it doesn't have any enormous strength like you could say, but this is a normal bullish candle, just conveying us that there are bulls in the market who are taking the price up, right? It started at 101, then made a low of 100, then went up to 104 and gave a close of 103, right? A normal bullish candle that you get to see on a regular basis. The fourth one here is a neutral bullish. So this is an indecision candle. So it didn't have a very good up move, nor was there a down move, that is selling pressure, nor was the buying pressure. It just played in almost in the same point, right? It is just a pause candle. You might see candle like this where it doesn't really convey us anything significant. It just conveys us the pause, right? So just based on this candle, we won't be able to take any trade unless and until the next candle conveys us what is happening. So neutral bullish, based on this candle, we don't take any trade. It doesn't really has any meaning. This is just an indecision between buyers and sellers. So the final one is the least bullish, right? So here you can see the price opened at 100. It went up to 104, a strong candle like the first candle, but it was not able to close at 104, right? Like the second most bullish candle that we have seen. It went up, gave a strong candle, but then it started coming down, making a wick. The sellers pushed it down and gave a close at 101. So here what does it convey? It conveys us there were buyers in the first half, but they were not able to give a good close, strong close. They were not able to sustain at that particular point. And then from there, the sellers took it down and it has come down to a certain level and it has closed almost near the opening of the candle. So whatever the buyers have pulled the price up, everything has been taken down already by the seller. So if you see these candles near the resistance area, it would make sense, right? We will get to it. And next here we have 5 candles arranged based on the strength in the bearish manner. So previously we saw for a green candle. So here the price started at 100. It opened at 100, started coming down, gave a strong bearish close at 96. Right? Again, no wicks, nothing. It says us that there are like good volume sellers who are pushing the price down, right? And in the second candle here, it opened at 99, right? And it started going up, made a high of 102, a green candle, but was not able to give a strong close at that area. But the sellers pushed the price down and bought it around 98 and gave a close around that level. So again, you would be knowing by now, there were buyers, but they have been taken away by the sellers in the market, right? So in the third one, again, it is a normal bearish candle, doesn't significantly say anything. The fourth one is a neutral, that is an indecision or pause candle. And then the last candle, you can see the price opened at 100, right? It almost gave like the first red candle here. It was a very strong red candle, but was not able to give a close at 96. Right? And then the buyers pushed it up and gave a close at 99. So if you see candle like this at a support area, it will make a lot of sense. And with other confirmation and other price action things, we can look for an entry. Yes, a support and resistance is something that we have not learned yet about, which we will eventually get into. So these were the candles for people who are new, for people who don't know how the longer wick or the upper wick is being formed. This was just an indication of how it would look like. So getting started with the example. Okay, in the first example here, we can see the price has been playing in a range here. That is, if you're connecting a trend line here and if you're connecting a trend line here, we have a pattern, right? And at the breakout candle, you can see a Maruboso. That is the most strongest candle that we have. Most probably when a breakout happens, the candle will have good volume, right? Because there are people who are waiting for the breakouts, the stop loss hit that happens, systematic trades. So all these things triggers good volume, and this candle, mostly the breakout candle, will have Maruboso. And just because you see a Maruboso here, does it mean that okay, it is extremely bullish and I have to take a trade at the high? No, right? You will have to check in smaller time frames, or you can even wait for a pullback to happen in order to take an entry. So this video is about candlestick, not just looking into entry trades, but just to understand what are the type of candles we have, and how to spot them, and what level, if it is being formed, it is the best for you to trade, right? So the next one is going to be hammer. So here we can see there is a longer lower wick with a small body. That is what an explanation would say. But you can see hammer is something that makes sense if it is being formed at the bottom of a downtrend. That is, you can see the sellers have really brought the price down, and almost at the bottom near a support area you will be able to find a hammer. There is a range kind of thing here, so people would have entered somewhere at this point. There's another range breakout here, might be they would have entered here. So all these sellers have managed to push the price till here, and at the end, along with support, if you see a hammer, it is a confirmation that the sellers who have pulled the price down have slowly gotten exhausted. And at this point, if you see a hammer candle like this, you can wait for another candle to close above this red candle, and then that would trigger your entry. You would be long, and the stop loss will be below this hammer here, right? So that is how you can enter. And like we have seen earlier, when you enter a trade, if you're entering on a intraday time frame, you can keep 1:2, 1:3, and based on that you can book your profits, right? Yeah. So in the second example, if you see, the price started going up from this point, right? And almost at the top here, you can see it has touched multiple times here, but it was never been able to make a new high. And once the breakdown happened, you can see it came down, it had a good volume red candles, and then somewhere around it closed this area. Next day it had a sharp vertical fall, right? Why I'm calling it a sharp fall is, you can see out of this 8 to 10 candles that we have, we don't have 1 or 2 green candles even here and there. It is a sharp move. And after a sharp move near a support area, if you find a hammer, that is an indication that okay, the sellers who have pushed the price have gotten exhausted, right? And you can also see the volume, the strength of the candle. Here it was a good red. Then slowly, once it starts coming down, the size of the candle is also being reduced. Reduced size also means as the strength also is being getting reduced. That is how you can understand from the price action perspective. So here we have a hammer, longer lower wick with a green candle. So for hammer, you will always have to wait for another candle to close above the hammer in order to take a trade. First of all, we are not going to take a trade just based on hammer. Only if you see hammer at a support, it would make sense. And then once the next candle closes above this hammer, your entry would be triggered. You will be on a long position. Your stop loss is going to be below the hammer here, right? And in the third example, here you can see we have a hammer, right? But you can also notice we have another hammer at this particular point. We have a hammer here, we have a hammer here. So if we are taking trade just based on random hammers, right, this is how many times your stop loss will be hit. See, there's a hammer here, so if you've taken a trade here, the next candle would, or this candle would hit your stop loss. If you're entering somewhere around these areas here, your stop loss is hit. So hammer is something, not just hammer, for any candlestick pattern that you have, you can wait for the confirmation and look for a better setup, that is either support area or resistance area. And at support or resistance, if candle formation is being formed, only then the entry would be triggered, right? So that is why I particularly added this example here. And at this point here, you can enter, and this is going to be our stop loss. And the target, say for example, this would be the target that we have. So every time you take a trade and the next there's one red candle, one green candle, you might tend to feel like, okay, let me exit. Okay, it is in loss, let me exit. That shouldn't be the case. So every time you're taking a trade, up front your target is set and your stop loss is set, right? So it is either target or stop loss. So even if there's a red candle, you have to hold on because you have a target in place and stop loss in place. That is how you can control the emotion that is happening in the market, and that is how you can slowly get disciplined as well. So you can fix it, you can either place it, or until that you can hold on to that trade, trying your maximum to not exit based on one red, one green, and all this emotional things that's going on, right? So in the next example that we're going to see, we see that the price came down and then it started going up. Almost at the high, we have a hanging man. So again, hanging man just in a random place doesn't make any sense. Near a resistance area, hammer with another confirmation candle, you can look for an entry, and the previous swing low will be your place where you can book your profits. Right? Okay, again in the second example, you can see the price has rallied really up. It went up, had a slight pullback, again went up, very small pause, then again went up. So almost at the top, we are able to see a hanging man here. So again, you will wait for another confirmation candle. You will be entering at the red candle here. Your stop loss will be above. So like I said, once your stop loss is above for these many days or for this much time, you will be in that trade. Right? So if you feel like it is not giving me the move I'm expecting, like 1:5, 1:8 move and all, if you are at 1:3 or 1:2, at that area you can book at profits. Rather than being stuck in some trade where there's no big move, you can exit at 1:3 minimum, at least 1:2, 1:3 is a good setup for intraday where you can book your profits, right? Okay, so here we have an inverted hammer. It is just opposite of what we have seen in the hammer. Here it is going to have a upper wick with a small body, and this candle will be formed at the base, that is at the end of a downtrend. You will be able to see a inverted hammer. So here you again, because it is a single candlestick, we will wait for a confirmation candle, and once the candle closes above this hammer, you can enter and your stop loss is going to be below the inverted hammer. Okay, again in this example also we are able to see we have an inverted hammer here, but it is a very small one, right? So every time you cannot expect a very good candle to be formed. This is how slightly the candles can look like, and here your entry would be on the next candle, right? See, in this case, this candle is a big huge candle. So will you be entering at this point here? First, you will see what your risk reward is, and for this particular trade, your stop loss is going to be below the inverted hammer. Will your capital and risk be affordable for you? And if it is, you can get into smaller time frames rather than entering here. So this chart is in 1 day. So you can get into smaller time frames like 1 hour, and then after one green candle being closed above this hammer, you can look for entry so that the stop loss that you're going to set is going to be minimum. And also you can see the prices rallied up really well. It has been making higher highs, higher lows, and it went up really well. You can keep a risk reward in mind and a particular ratio, and you can book your profits. Or you also have a trend line here connecting all the swing lows, right? So what you can do is, unless and until the trend line's low, that is the trend line is being broke, you can trail your stop loss and take it up. Okay, here we have a shooting star. So this is again like hammer and shooting star is a beautiful setup if you're able to combine it with support and resistance. So at the top, almost after a good bull run, if you're able to see a shooting star, it is an indication that the bulls who were there in the market, who've taken the price up, have tried to break that resistance area, but there were sellers who again pushed the price down and bought it below the resistance area. So it is just a indication that buyers have lost the momentum and sellers are slowly getting in, right? But only our entry will be triggered if the next candle closes below the shooting star, right? So you will be entering at this candle here. Your stop loss is going to be above the trend line here, and keeping a certain risk reward, you can book your profits. So in the next example, so here in the first candle, you can see a good volume, that is a huge green candle here. And the next candle we have is slightly smaller than the previous candle. And the next one again is smaller than the previous. And the next is again smaller. That is, you can see a rejection candle here. So as and when the price is going up, it is starting to lose its momentum. It is starting to lose its strength, right? And at the top, you can see we have a shooting star. So it tried breaking the area of resistance twice, but it was not able to successfully give a close above the resistance, but came down and gave a close below the resistance. So if a candle closes below the shooting star, we can enter. So we saw a shooting star here. So next, there is a green candle. So will we be entering at the green candle? No, right? We will wait for a candle that is at this red candle. We can enter, setting our stop loss above this shooting star. Again, in this area also you can see there is another shooting star again with another confirmation candle. So you can switch into smaller time frame and you can enter here, setting your stop loss above the shooting star, and that is how the price came down. Unless and until you see the previous support, you can hold on to the trade and you can trail your stop loss. Okay, so this was for the single candlestick pattern. Now we are getting into multiple candlestick pattern. The first candle here is going to be a bullish engulfing. So here you can see the first candle is a red candle, right? A smaller red candle. And the next candle that comes opens slightly lower than the previous red, but manages to make a low. It was slightly a red candle, and then it started going up and gave a strong close at the high point, right? See, this is a very good reversal candle that we can look for, and particularly at a bottom or at a support area, if you're able to see this pattern, it is not just an indication that the sellers have lost the momentum, but it also is screaming to us that the bulls have taken it already. They have completely engulfed. So this green candle here you can see is engulfing the previous red candle completely, right? So it is saying it is not just the sellers who have lost the momentum, but also the buyers are slowly getting the power and they're going up, right? So if you find this candle at a support area, see at this example, it went up, it played here in the range and then had a good sell off here, and here we can see a small tiny red candle followed by a green candle, right? So this is conveying us the sellers who have brought the price down. You can also see by the candle's volume that the strength of the sellers have been slowly reduced, and at the bottom, not just it has been reduced, it has also been taken away by the bulls, right? So at the green candle here you can enter. So this, you don't have to wait for another confirmation candle when it comes to multiple candlestick. Only for the single candlestick pattern it is good for you to wait for a confirmation candle, but here you can right away enter at the green candle here, and your stop loss is going to be below this engulfing pattern, right? Yeah, that is how the price is rallied, and you know the drill, like how you can book your profits. There are multiple ways based on if you are doing it intraday, positional, you know how to trail the stop loss. Based on that you can. If you're not sure how to do it, we will make a separate video on how that is to be done. Okay, we will see another example for bullish engulfing here. Again, at this point we see a tiny red candle completely being engulfed by a good green. So you can enter here if your risk reward is favoring you. So the risk that I'm going to take for this trade is going to be this huge candle, right? Because your stop loss is going to be below the engulfing candle. So if your risk is okay for you, you can look for a trade here, or you can ignore setups like this and look for a trade that has minimum risk. Okay, we'll see one example for bearish engulfing as well, and you can see at the top, right, you can see the candles almost were dead, didn't have much move and all sort, and then it tried going up, but again at this place we have a bearish engulfing, one tiny green candle completely being engulfed by a red. So previously we said bullish engulfing should be formed at the support area, but because it is a bearish engulfing almost at the top, it conveys us the buyers have lost and the sellers are slowly taking the control. And here you can enter at this particular point here, and you can set the next support area as your target. So here you can also see a hammer. If there's no support or anything as such and don't know where exactly, you can look for candles like this, right? Or if you've entered a trade and your support is somewhere below this area, but you see a hammer and if you're still holding on to that, it is something bad. You can exit your 50% here, and then you can even trail the rest. And in the next example is going to be an inside bar, a very important pattern again. It is also like an intraday trading strategy because this is something that has a very good accuracy. So here the first candle is going to be a mother bar. Okay, this is the important level, that is the high, and the low is going to be an important level. So the inside bar candle we have should be completely between the high and the low of this particular candle, right? And if you see the high is being broke, you can go for a long position, and if you see the low is being broke, you can look for a short position. So in this example you can see we have a inside candle here. Most of the times it happens in a breakout, after breakout a kind of pause, it takes before a very good up round. That is where you can most likely spot an inside candle. So here, this is the first candle, this is the high, this is the low, and there's another candle completely within this, right? So if the high is being broke, you can go for an entry with 1:2, 1:3, 1:2 also would be a very good for this setup, right? And if it breaks the low and it starts coming down, you can look for a short entry. This is something that you can find on a regular basis, and so because this is a very highly rewarding intraday strategy that you can spot on a regular basis, do let me know in the comment if you want me to make a complete video based on inside candle. We have seen single candlestick pattern, we have seen bullish engulfing, bearish engulfing, and now we have 3 candle patterns. So the next pattern we have is Morningstar. This also is a potential reversal candle that you can spot. So here the Morningstar would contain of 3 candles. The first is going to be a red candle, okay, and then a pause candle followed by a green. So if this is being formed near a support area, it is a good indication that the price is at a reversal point, at a U-turn point, right? So here in this example, you can see after a good down move, right, it has been making lower lows and lower highs, and almost near the support area here, you can see a red candle, then a doji, a pause, and then a green candle. So what does this convey? This conveys it didn't just end the strength of sellers here, but also the bulls are slowly getting into the rally, right? So in this cases, you can enter at the green candle here, placing your stop loss below the Morningstar, and you can trail your stop loss, you can set a risk reward, and you can enter based on that. So again, like I said, every time there's a huge candle like a green candle, you can at first place see the risk for the particular trade that you're taking, and if it is okay for you, you can look for the entries, right? So that is how it has worked. And in the second example, if you see at this point here, we have a red candle, we have a small tiny candle here, and then a green candle. So if you expect every time the price has to give a clear indication, the red complete pause and a then good green candle, that is not going to happen always like a textbook version, but sometimes you might also find patterns like this that are hard to spot. Here you can enter at the green candle here, your stop loss is going to be below the Morningstar, and the target would be the next resistance that we have, right? And that's how the price has gone up, and you can book your profits near the next swing high, and you can even trail your stop loss. Okay, in the evening star here, it is just an opposite of what we have seen, right? There's a green candle, there's a pause, and there's a red candle almost at the top, right? So at this point, you can enter here, keeping risk of the area above, and you can trail your stop loss, and that is exactly how it is worked. So you can set your target based on the move. So if you see the previous swing low here, we have considered this point. If it was earlier somewhere around this area, you will book your profits there. So based on the price action, based on how the price is making its move, according to that, you will be setting your target and stop loss, right? Okay, in this example, again, you can see almost at the top, the exhaustion is already happening, right? Because you can see almost at the top here with 4-5 touches, it is trying, but it is not able to give a very good new highs, but it is just playing and spending time around this area, right? That is a first indication that the momentum of buyers have slowed down, right? It's not conveying us it's just completely gone. It is just conveying us it is slowed down because it's not able to break the resistance area it has. And eventually we also have an evening star here, right? So you can enter here, keeping the stop loss above the zone, and at least this area is the next support we have. From there you can book 50%, you can trail 50%, right? It had a gap down, but that is again after that area also being broke. You can see it has given us even lower targets, but based on support and resistance, you can book your profits. Yeah, in this example, you can pause the screen. I will give you 1 second and just see if you're able to spot morning star and evening star here. I hope you guys have done it. Okay, so here we have a morning star. This is the same example we saw earlier. We have a morning star here, red, pause, green, and at the top here we have a green, pause, red, right? So based on the move that's happening and based on support and resistance, you can place your risk reward. So that is it, guys, for this video. We have seen few powerful reversal candles like bullish engulfing, bearish engulfing, Morningstar and all these things. So like I said earlier, candlestick is something that should be combined with other price action or key levels in order to have a good accuracy in trading. So if you're not familiar with the names, if you're not able to remember the names, that's completely fine. If you're not able to remember what a hanging man is, what a shooting star is, in the long run you will be able to. But the main idea of this video is the logic part. So if you've understood, if there's a longer wick, what it conveys, and if there's another candle like this at the support area, what it conveys, that should be more than enough for a candlestick for a beginner. From here we are going to slowly learn the price action things. So once you combine all these things together, it is going to make sense. For this video, for the candlestick, that is it. So I will catch you guys in the next video. Thank you for watching.